Well, as you guys can see, I am still in Africa. And let me just zoom in for you on that. That is clearly a giraffe. I think that's a giraffe, right? That is a giraffe drinking water. But also, as you guys know, I can't hide anything. That is clearly Africa, and this is, right? Exactly. But in this video, I have, well, Jamie Dimon says you guys have about 5 months left, and then it all goes kaput. And then we have another economist that is saying we have a 25% more down leg to the downside, and that's a pretty long leg. Oh, also, if you're wondering why the stock market is down, we will go into that in today's video. Let's dive in. Also in this video, we are talking recession, what's happening in California, because if you live there, it's worse. And the housing market. Boy, I'm just like throwing it all in your bucket in one time. But this is always breaking news. You got to know what's happening right now. Oh, for investors, watch Jim Cramer's morning meeting live. I think I have a little bit of Jim in this one today, too. The Dow falls slightly Friday. Heads for worst week since September on inflation. So that is what these kids are going to tell you, that is why the stock market is tanking this morning, is because, well, we got some inflation numbers in. And honestly, heading over to the markets, I would say they're not reacting too much. You're only down about a half. I mean, that's... let's take a look at just U.S., not major. Yeah, Russ, the VIX up a tad, Dow down a little bit, Russell down. That's a little bit. It's nothing to get too scared about. And what you guys should be worrying about is not the stock market. What you need to be worrying about is the yield curve and how bad it is. And BlackRock says, get ready for a recession. That yield curves always predict a recession unlike any other, and what worked in the past won't work now. And an analogy that I like to use is like the Titanic. Where are we at in this Titanic? Well, we hit the iceberg, okay? The boat split, but you see both sides, so we're still above water right now. Blue line stock market, red line yield curve. Do you see how it's going? How on one end it's short and the other end it's long? That's the red line. So you want it to look like this. This is healthy, okay? And then banks will actually borrow at one end and lend at the other, but they can't do it if it's flipped. Well, that was back in the day. You want to see what this yield curve inversion looks like today? Yes, it's going the complete wrong direction. Let me move it here. See this? And in a week, when the Fed opens its mouth, he's going to move short end all the way up there, and it is completely going in the wrong direction. This is so bad. So this is when we talk about yield curve inversions. This was bad, okay? And that's how much the stock market crashed. The blue line is the stock market. The red line is your inverted yield curve. This thing is like never seen ever before in the history. Not just here, but Eurodollar. And that's when the entire world is leveraging to protect themselves. This is just an insurance policy. The bond market, they don't have your FDIC. They have to leverage and protect themselves with bonds. And they're actually, believe it or not, I'm going to see if I can get Steve on, Stephen Van Meter tomorrow, maybe give you a little insight. I actually hung out with him yesterday, so I think I'll get a little clip for you of him today. We'll talk about it a little bit. That'll be in tomorrow's video, so make sure you subscribe so you can see it. But everyone around the world is hedging, and they use futures to do it. But as goes on with BlackRock, the global economy has entered a period of elevated volatility, and previous investing approaches won't work anymore, BlackRock. And then zooming in a little bit more, because I know your eyes, you're like me, a recession is imminent. That means it's going to happen. But central banks won't be able to support markets this time by loosening policy. Yep, especially when you have inflation the way it is, hence the reason why the market actually opened lower, but it looks like it's picking up some steam. And recession is foretold as central banks race to tame inflation. It is the opposite of past recessions, BlackRock strategist said. Oh, and if anyone knows the bank, it's this guy right here. That would be Jamie. So when Jamie is telling you, and this was, he said 6 to 9 months, JP Morgan, CEO Dimon warns of a recession, 6 months. Well, I'm counting the days down because this was October 10th. So that would be 30 days. So you're looking at 5 months till recession. Even though I think, and you feel it, that we are currently in one. I'm okay, and you're okay, because we know how to make money in a recession. We know how to make money in not a recession. Market goes up, we make money. Market goes down, we make money. And Dr. Doom, basically saying the same thing that everyone else is saying. Dr. Doom says severe recession. When? Well, now, but then next year it's going to be severe. Will cause stocks to drop. Bump, bump, bump. You guys ready for that next leg down? That would be 25%. Also known as another leg lower. 25%, Danger Will Robinson. Which you would know this because you look at the charts and you can see the charts and you don't have to listen to these guys like Jim, which I told you. I had a story on him. So usually whatever he says, it's just completely do the opposite. Jim Cramer says he expects many layoffs. Okay, well, looks like we'll have full employment at companies after Christmas. I mean, yes, I'm going to agree with you, Jim, on this one. Oh, and it looks like actually you guys are taking advice, dumping, look, Bed Bath & Beyond, BYND, or is that's Bed, is that Beyond Meat? Been almost 8% today. And how about that Beyond Meat? Yep, that's what it was, BYND, going from, don't look at the red line, that's my swing trade line, going from $235 to $15, and I had friends that were in it, and they used to brag about how much that they made. This was probably 2 years ago. I go, well, come talk to me after you've lost it all. Oh, no, you have no idea the fundamentals. I'm like, I don't trade fundamentals. See that blue line right there? Yep, you dropped below that blue line. That was at, could have saved you a lot in car insurance. $143, drops below the 200. There is no 200 week. That is the 200 day. And then kaput. That would be, we're down here at $15. I mean, imagine how much money you could have made shorting that. That was a good short. And also, if some of you guys keep asking about TLT, that would be the bond market. That is your double bottom down there. I would be shocked if that was not the lowest. I think I called it on that one. Actually, my bear market course, I had that in that. I said, this is where it's going to break. And then I was an idiot, and I had a long position there because it's the bond market. I'm like, I'll see you guys later. So some of you asked me what's going on with the TLT play. That's right there. You zoom in so you can see it right in this zone. That's your double bottom. We're coming up from there. I would not be shorting that position. That was a head and shoulders pattern that played out right there. Actually, I missed it from my trade on that. Had it at 95.66. The lowest it got was 92, 93. I do put my money where my mouth is. So do my friends. This is where they took out all of their longs. If you are interested in how to play a bear market, grab my bear market course down below. I also have a bear market watch list if you're interested in exactly the stocks that I'm trading. It's just $20 a month until that goes up to 30. All that I ask is do not do the watch list unless you know how to drive the plane. So start with my swing trade, that's that red line, and then move over into my bear market. You could learn how to do charting, and you don't have to listen to these guys who say the charts don't work. But I say he don't work, so you don't have to listen to these guys anymore when they tell you all their fundamentals on Beyond Meat or Coca-Cola or whatever. As you know, I do not trade what comes out of their mouths. Those are just big farts. I trade charts. Those are fundamentals. I don't trade fundamentals. I trade technicals, which the charts may come in handy because you could find out whether or not you're going to have a job next year. Actually, someone very close to my family, he was looking at the chart. His stock dropped below the 200. He said, should I panic? I said, yes, you should panic. Close your position. Get your retirement out. Did not listen to me, but it is what it is. But the charts will always tell you whether you have a job next year or whether you will have a retirement. But if you are in tech, buckle up, Buttercup. It's going to be a tough ride, almost like you're at Disney. That would be a tough ride too. The analyst who said big tech layoffs show, quote, a new reality, sees more cuts ahead, as if it hasn't been a bloodbath already. I mean, just looking at that chart of layoffs, tech employees laid off month by month, year to date. Not looking too good. Can't imagine. See, this is 2022. Imagine what 2023 will bring us. Oh, and breaking news, how about that oil trade, right? Remember when everyone said crude's going to $200 a barrel? And I said, what was that, like a triple top or something? I'm like, nope, that's it. Crude crushed. And you guys need to understand, money always has to be moving. You're moving into commodities. You're moving into equities. You're moving into your mom's basement. You're always having to move. But crude crushed as jobs data signals that you're probably not going to have a job next year. Imminent recession. And look at the chart in claims. Actually, not so bad if you live in Tennessee. You actually are negative, so whatever that means. And the Virgin Islands, I didn't even know they exist. And what is the worst? Well, it's usually it's California. I'm pretty sure. Let me get up there. There we go. Look at the claims. Let me just weekly change in initial claims by state. California just goes off the entire page. Look at that. Still keeps going. Still going. Oh, finally. That's everybody. So 1 minute, jobs be plentiful. The next minute, lines off the page. But Bravo, I don't care about my job. I have so much equity in my home. I am going to live high on the hog forever. Okay. I took your advice on, getting out of the stock market. So I'm making money on the way down, but it's okay. I will forever be okay because I have so much equity. Well, except for now $500,000. Can I round? Can you give me 50? 500,000 home buyers are now underwater. Bring back 2008, 2009. Underwater as early FHA delinquencies hits 2009 levels. We are already there yet? Let the evictions begin. You have not seen anything yet. But it's okay because we're going to have a lot of company with our misery because this is global. That's just how it is. You got that inverted yield curve global. You have major economies around the world. We're all suffering, but at least we could kumbaya and do it together. Major economic contraction coming in 2023. Followed by what? Even more inflation? No more inflation, please. And I know this is not breaking news, but I think all of this is going to be followed by disinflationary, deflation. I'm waiting. This one might be a little bit more stickier. I guess $10 trillion can have a slight effect on inflation. But thank you guys. Make sure you like the video if you've made it this far. I hope you guys are doing great. Enjoy your weekend. I will be working, and I will see you tomorrow.